Cracking the code of the 123 MACD trading strategy. By the end of this video, you'll discover how this strategy can boost your trading skills. It relies on the MACD indicator and a simple 123 price action pattern. Once you get the hang of it, you'll start seeing signals all around you. When a new trend begins, when a retracement ends, within a trading range, and even during upward or downward trends. Alright, let's dive in. This scalping trading strategy relies on price action and basic market structure principles that are essential for any trader to grasp. It's primarily utilized as a continuation trading setup, aimed at capitalizing on the prevailing market trend. The approach is straightforward, employing a basic 1-2-3 pattern alongside the MACD histogram. Despite its emphasis on continuation upon confirmation, this strategy can also serve as a reversal pattern, particularly when the short-term trend direction shifts. In any trending market, there's a consistent pattern of achieving higher highs and higher lows. To sustain an upward trend, each subsequent upward swing must surpass the previous swing, represented by point 2 in the formation. Once the price exceeds the level set by point 2, it serves as confirmation of the 1-2-3 pattern. In an uptrend scenario, the price will establish 3 key points. Point 1 marks the lowest low, establishing a support level. Point 2 emerges as the highest point, forming a potential resistance level. Point 3, the second low point, serves as another support level, which should be higher than point 1. A price breakout above point 2 indicates a continuation of the uptrend. In a market characterized by a downtrend, the 1-2-3 pattern emerges in a distinct manner. Initially, point 1 materializes as the highest peak, signaling resistance before the price descends. Subsequently, point 2 manifests as a lower low point, establishing a crucial support level. Finally, point 3 arises as another point of resistance, positioned lower than point 1. When the price breaches the support level set by point 2, it serves as a strong indication that the market is poised to continue its downward trajectory. This breakdown of the 1-2-3 pattern in a downtrend market provides traders with valuable insights for identifying potential entry and exit points, thereby aiding in decision-making and risk management strategies. The 1-2-3 pattern holds significant potency in trading analysis. During an uptrend retracement, a low point emerges, followed by a subsequent rally in price. Now, the point 2 serves as a short-term resistance level. In this case, as price ascends to the point 2, it initiates a retracement towards the initial point 1. However, it's crucial to avoid a retracement all the way back to point 1, as this would indicate a formation of a double bottom. It's important to note that confirmation of the 1-2-3 pattern only occurs when the price surpasses the high point set at point 2. As demonstrated in the examples above, the 1-2-3 pattern is incredibly straightforward, presenting numerous opportunities and an excellent risk-reward ratio. Once you grasp the fundamental principles and gain some practice, you'll start noticing these patterns everywhere. It's worth noting that the 1-2-3 pattern can sometimes develop rapidly, while at other times, it may take a bit longer to fully form. One crucial point to keep in mind is that the larger the number of bars involved in the 1-2-3 buy or sell pattern, the more significant the subsequent market movement tends to be. This insight emphasizes the importance of patience and careful observation when trading based on the 1-2-3 pattern, as it can lead to potentially substantial gains if executed correctly. The entry strategy for the 1-2-3 pattern is quite straightforward. You simply execute a buy or sell order when there's a breakout at point 2. However, a common issue arises in trading, where many traders and systems impulsively buy or sell at the breakout of every pivot point depicted on a chart. This is where the MACD histogram plays a crucial role. By incorporating the MACD histogram, we can effectively filter out false signals generated by the 1-2-3 pattern. The MACD histogram functions to bridge the time gap between price movements and the MACD indicator, offering deeper insights into the ongoing battle between bullish and bearish forces, compared to the original MACD. It stands out as one of the most valuable tools because it not only identifies which side currently controls the market, but also gauges the magnitude of their influence. The MACD histogram calculates the gap between the MACD and its signal line, which is essentially the 9-period exponential moving average, EMA, of the MACD. This difference is visually represented by vertical lines on the chart. What makes the MACD histogram intriguing is its ability to fluctuate both above and below the zero line. This characteristic earns it the title of a momentum oscillator. When the faster MACD line resides above the slower line, the MACD histogram registers positive values and appears above the zero line on the chart. Conversely, when the faster line falls below the slower one, the MACD histogram displays negative values, plotted beneath the zero line. Notably, when the two lines intersect, the MACD histogram assumes a value of 0. This understanding of the MACD histogram dynamics provides valuable insights for traders, helping them to interpret market momentum and make informed trading decisions. The height of the histogram directly reflects the difference between the MACD and signal line. As an uptrend or downtrend gains momentum, the MACD histogram grows taller or deeper, depending on the direction of the trend. Conversely, when momentum starts to wane, the MACD histogram shortens in height. It's crucial to pay close attention to this aspect because we'll utilize the fluctuations in the MACD histogram to refine our trading signals. You'll reap the maximum benefits when you can accurately interpret the histogram's real value. When the histogram is positioned above the zero line, indicating positivity, but begins to decline towards zero, it suggests that the uptrend is losing strength. Conversely, when the histogram resides below the zero line, indicating negativity, but starts to ascend towards zero, it signals a weakening downtrend. In essence, the diminishing height of the histogram, whether above or below the zero line, indicates a diminishing momentum underlying the trend. However, it's essential to note that while this serves as a warning sign, it doesn't inherently provide a signal to initiate long or short positions. Now, let's discuss how to effectively filter 1-2-3 signals using the MACD histogram. It's quite straightforward. Let's consider a long entry based on the 1-2-3 pattern. First, we identify point 1, followed by the initial upward movement marking point 2. Subsequently, there's a retracement leading to a higher low, forming point 3. The 1-2-3 pattern is confirmed when the price surpasses the recent high of leg 2, signaling the ideal time to execute a breakout trade. However, it's imperative to seek confirmation, as blindly following signals without considering the broader context can lead to significant losses. The key factor here is the MACD histogram. In this long setup, while point 3 is forming, the MACD histogram must consistently remain positive and stay above the zero level. This criterion is crucial. It indicates that although the MACD's height may decrease during the formation of point 3, it remains above the zero line, signifying ongoing positive momentum. Therefore, even if the underlying momentum weakens slightly, it's still positive. When the price eventually breaks point 2, we can confidently enter the trade. This is because during the correction phase, when point 3 was established, the bullish sentiment prevailed, maintaining the upward momentum. Now, let's delve into how to effectively filter short signals using the 1-2-3 pattern and the MACD histogram. Firstly, we identify a downtrend. Point 1 marks the peak, where the price encounters resistance and starts its descent. Point 2 follows as a lower low, establishing a support level. As the price rebounds, point 3 emerges, forming another resistance level, position below point 1. It's crucial to note that point 3 must be lower than point 1 for this setup to be valid. In this short setup, while point 3 is forming, we monitor the MACD histogram, which should consistently remain in negative territory without crossing above the zero level. Throughout the formation of point 3, although the MACD histogram may increase in height, it must remain below the zero line. This indicates that despite any potential increase in underlying momentum, negative momentum prevails. Upon the price breaking below the support level set at point 2, we initiate the trade, leveraging the downward momentum at our disposal. This breakout below point 2's support level suggests a high probability of the market continuing its downward trajectory. 1-2-3 patterns, also referred to as continuation patterns, depict breakouts from consolidated prices, aligning with the prevailing trend. However, they can also indicate a potential reversal in direction. Among various setups, my preferred and safest ones are those indicating trend continuation. Since this strategy is tailored for scalping and day trading, it's essential to focus on the short-term trend and trade accordingly. Long-term trend analysis isn't necessary because the goal is not to engage in long-term trading. For instance, when trading on a 5-minute time frame, the activity on the daily time frame becomes less relevant. This distinction is crucial as each chart possesses its unique trend dynamics. In this context, our objective is to trade from one swing to the next by aligning with the short-term trend, ensuring that we're positioned on the correct side for the subsequent swing. For those with experience, this scalping setup can also be utilized to trade reversals effectively. In an uptrend scenario, point 1 signifies the initiation of the first leg towards a new lower low. Subsequently, point 2, or the second leg of the pattern, occurs during a price retracement that fails to establish a fresh high. Thus, in this uptrend illustration, while the first leg is driving prices lower, the second leg attempts to push prices higher, but fails to reach a new high, thereby forming a new lower high at point 3. If the price manages to establish a new high, the uptrend remains intact. Moving to the final leg of the pattern, the price once again descends, surpassing point 2, and eventually forming a new lower low. Personally, I typically disregard these reversal setups, as trend continuation scalping setups tend to have a higher success rate. However, it's worth noting that trend reversal setups may offer significantly higher risk to reward ratios. Setting a minimum target level is crucial in 1-2-3 trades. It's recommended to aim for a target level that's at least the same distance as the size of the 1-2-3 chart pattern. Measuring this from the confirmation level's outset will provide an approximate minimum target level. The size of the 1-2-3 pattern is determined by the vertical distance between point 1 and point 2. In terms of risk management, your stop-loss order should be positioned around the area of point 3. Occasionally, during volatile market conditions, prices may temporarily extend beyond point 3 before retracing. To avoid premature triggering of your stop-loss, it's advisable to place your stop slightly beyond that level. For bearish patterns, the stop-loss should be positioned above the peak of point 3. Conversely, for bullish patterns, the stop-loss should be situated below the bottom of point 3. This approach helps mitigate risks and enhances the probability of successful trades. With this explanation, you now know that the best way to trade the 1-2-3 price action pattern is by using the MACD histogram filter. By utilizing this filter, the probability of our trading success becomes 3 times more accurate than if we only rely on the 1-2-3 price action pattern signal alone. So, if you want to implement the exact setup of the 1-2-3 MACD trading strategy demonstrated in this video, you can download all the templates and indicators from the description section below this video. I've included a template with the system that you can effortlessly add to your chart, automatically plotting all these indicators accurately. This way, there's no need for any additional hassle. Look for the download link in the description. Here are other examples of how to trade the 1-2-3 MACD to fully understand this wonderful strategy and to make the most out of it. This 1-2-3 MACD trading strategy is an extremely low-risk, high-reward strategy which can and will change your life if you use it properly. The only thing that could make this system fail over the long term is you not sticking to the rules. That's it. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.